Hello, what I wanted to talk about in this video today is the importance of maintaining an emergency fund and liquidity. And by liquidity, what I mean is cash on hand. In other words, the money that you have sitting in a savings account, either at a credit union or a bank. And you need to keep it in there just in the event you need access to capital right away. You want to be able to go in there and take the money out and use it for whatever might come up. So a lot of people will ask me, well, how much should I maintain in this account? Because you don't want to have too little, but you don't want to have too much cash either. So what's the right amount? Well, my general rule of thumb for my clients is a minimum of 3 months of living expenses to a maximum of 1 year of income. So there's a couple of reasons why you want to maintain this liquidity. The first one is in the event that an emergency comes up. Now, what's the definition of an emergency? Well, an emergency is something that we can't plan for. All right. So let me give you an example. I'm driving down the road and my engine just freezes up. Now, it doesn't work anymore. Well, obviously, I wasn't expecting that. I wasn't planning on my engine to just die. And so what I would do is I would take the money from my bank account and use it to help pay for the repair. Okay. Now, let's take that same scenario and I'm looking at my car and I say, my tires are starting to get a little low on the tread. They're balding in some areas. So I'm going to need to replace those tires eventually. Well, that's not an emergency because once again, see, I can plan for that, right? But the other reason why you want to maintain liquidity, and I think it's even more important than to cover emergencies, and that is for the opportunities that are going to present themselves to you during your lifetime. Now, what do I mean by opportunities? Well, let's think back in history just a little bit. We can even go back to 2020 during COVID, when we had all the shutdown of the economy. The markets just plummeted. They really did. You can go back even further and go back to the financial crisis of 2008, 2009, and then the markets crashed about 50%. We also had a real estate bubble that occurred. And so real estate prices just dramatically dropped. So people that had access to capital were able to buy into the stock market at really deep discounts. And then people that had access to capital were also able to buy real estate at really big discounts too. So they were able to use that money and even leverage it to maybe put down payments on these properties for loans and then acquire real estate at a big discount. So those are just a couple of examples. Also, maybe along the way, somebody comes up to you with a great business opportunity and they're looking for investors. Well, if you have the capital to invest, well, then you become a partner in that business. So that's why it's so important to maintain the right amount of liquidity. Once again, my point is you don't want to have too little and you don't want to have too much. You want to have just the right amount that you're comfortable with. Once again, minimum of 3 months of living expenses to a maximum of 1 year, whatever you're most comfortable with. And once again, if you use that though for an emergency or an opportunity, then what you start doing is with your cash flow, you start rebuilding it back up to the point that it was before you drew on it. So I hope this gives you a little bit better idea about the importance of maintaining a liquidity and an emergency fund. If you have more questions, feel welcome to reach out to me. And please remember to subscribe to my channel and like this video and click on notifications. And that way you get to realize when I add more videos. Thanks a lot for joining me.